Hi there, welcome to Kneppy Invest and welcome to November 8, 2024. Now, before we get into today's trading and what's happened on the ASX, pretty good day. Pretty good day all around just by looking at some of the indices. I should just mention that I had planned to do another video or record another video yesterday, but as I finished my ASX Daily Rundown video, I did receive a phone call from the mechanic because the audio system in my car, a Bose audio system, actually failed, no sound. And they were calling up, and it was a bit ominous because they didn't mention anything. And they told me it was the amplifier, which I half suspected it was going to be the amplifier because I checked the fuses were fine. And I thought, no, it's probably the amplifier. That's the most likely problem. And before I actually took the car to the mechanic, I thought I'd just check to see how much amplifiers cost. And I was expecting maybe $200 plus a little bit of labor. And then the person who called me said, oh, look, we have found the problem. It's the amplifier. And it's going to cost $4,500. And I went, what? And they said, would you like to book in that service? I went, no, I can buy an amplifier. In fact, I can buy an amplifier for the car I own, the model and year, for about $200. I checked for $200. So definitely not spending that sort of money to fix my Bose audio system in the car when I can do it myself. Anyway, because it actually happened just after or just before I recorded that video, that really stopped it. That stopped me from recording because I do have priorities, and that took number one on my priority list. Not solving that particular issue because I actually did actually have to drive back and pick up my car. And when I say drive back, they gave me a courtesy car at least, and so I drove back and picked up my car. And at that point, that particular video, there was never any scenario when I was going to record that video. So the plan now is for me to record that particular video on Sunday. So hopefully you're not waiting for that video. Anyway, so the ASX has had a pretty good day today, which is not surprising. Fairly good day on Wall Street. I'm pretty sure NASDAQ was up about 1.5%. In fact, I'm not guessing, but well, that's USA. USA had a really good day. In fact, except Mercado Libre, down 16%. In fact, one of my stocks of the day is an American company, which I actually do own. And I am cheating a little bit here, but share price of that company is up 27%. Now, let's go back to the market. So I just do have this bookmark here. So Dow Jones flat, according to this. NASDAQ up 1.54%. And the Russell 2000 down 0.43%. So small caps down in the United States, but here, lo and behold, they're up. Up, what was it? So I've got something more. 1.21%. What's happening there? Bit of a disconnection between disconnection, between United States small caps and Aussie small caps. Not sure what is happening there at all. Anyway, so the agenda for today's video, identical to all my other videos. We go through the ASX today, looking at the best and worst performing companies, stocks, which is also another word for companies, indices and sectors. I knew there was one word that started with S. Go through the top 5 stocks of the day. I have ordered the 5 companies. I'm not completely happy with the list, but yeah, some interesting companies in that list, some big companies in that list. And then if I have a bit of time, I'll go through some of your comments. So let's go quickly, have a look at trading economics just to see what has been driving our market higher today or lower. Fed cuts main rate by 25 basis points. China stocks fall as traders await more stimulus. It's all about stimulus in China. I'm not the biggest fan of that sort of thing. Malaysia jobless rate stays at over 4-year low. Bank of England cuts rates. Oil set for weekly advance. US 30-year mortgage rate up to near 4-month high. So the Fed's cutting rates in mortgages or bond yields are going higher, which tells us that the bond market is thinking we're going to see another round of inflation. And the reason behind that is because of Trump. Okay, let's have a look at Capital Brief. I'm just going to go through this fairly briefly or quickly. I did say briefly on purpose then. I'm just going to refresh this. Sometimes you need to press refresh because it doesn't refresh. It goes back to yesterday, and that's exactly what's happened here. Now, it is Friday, and typically Fridays tend to be fairly quiet. However, we did see a few AGMs released today, or not released. A few companies had AGMs today. A few companies released quarterly updates and also quarterly results. In fact, the stock of the day is a company, a fairly big company on the ASX, who did release some quarterly results. And the results were pretty good. I'm pretty intrigued to see how the share price of this company has performed. I don't know just yet. And what I'm looking for here is any sort of interesting ASX news that I might have missed. And I'm not seeing anything right now. Tech stocks led ASX gains following Wall Street rally. Yep. Neuren shares soar as Wilson's advisory hikes valuation. Now, I've mentioned, why do people sell when some sort of investing firm or investing broking firm or whatever you want to call it has a downgrade or a sell? And the flip side is true as also. Why do people buy when Wilson's advisory hikes valuation? So let's have a look at Neuren. They've had 2 really good days in a row. Let's see if that's up 15. That's just nuts. It's nuts. It's just nuts. So this is Neuren Pharmaceuticals chart. 3 good days in a row after a bit of a downturn in share price. And I think the market got this completely wrong. The market got Neuren Pharmaceuticals wrong. And who has to pay for that? Well, the only people paying for that are those who sold during this downtrend, particularly over the last month or so. Some people sold at about $12. The share price now $16.51. So we're talking about over a 35 to 40% increase in share price in a fairly short period of time. Okay, so it's not something I get excited about when a broking firm hikes valuation, but it's a company I own, so I can't be complaining that much. ANZ is no longer like for like. I'm not sure what that means. They did release their results today, and I have included ANZ in the top 5 stocks of the day. Labour, climate turmoil, blah, blah, blah. I just would mention that at this point in time, I'm not a big fan of Labour Party, particularly when it comes to their social media and under 16 banning. I think it's one of the most stupidest, dumb decisions a party can make because children under the age of 16 are going to get around it without any problem whatsoever. And in fact, I think it's more about control over adults than it is about helping under 16-year-olds. Why not focus on the bullies, that sort of thing? And bullies have been around for millions of years, probably. And they should be focusing on not the victims, but also the people who's doing, if they're really serious, they should be focusing on the bullies. Anyway, they're not doing that. Canadian Lithium shares fall on Q3 earnings. That's one actually announcement I did skip by because isn't there a takeover bid for Canadian Lithium? Is it that one that's I'm pretty sure it is. Block shares tumble on revenue miss. That is in my top 5 stocks of the day. News Corp shares gain as Q1 cost control impresses analysis. I did not have a look at that announcement. And then REA Group shares up after strong September quarter. And that is the stock of the day, REA Group. Okay, so let's have a look at the ASX today, and a pretty good day. Not seeing any reds, in fact, pretty big greens. Resources, the worst performing indice, up only 0.6%. So let's have a look at the different sectors. Any sector have a bad day today? And yes, energy. Energy had a pretty good day yesterday, bad day today. So that's probably understandable. But we do have 4 sectors up by over 1%. IT, discretionary, real estate after a pretty bad day yesterday, and also healthcare. Financials not that far behind. Gold's had a nice little bounce, understandable, because the market panicked yesterday with gold and silver, and gold's had a pretty good day. So I would expect many gold companies are among the best performing companies on the ASX. Even the banks had a good day. Not sure why. Small caps, good day. So no complaints from anyone, I think. In fact, even the ASX 20 is up 0.92%. So let's have a quick look at the ASX 20. I would assume maybe Woodside's down. So I'm going to say 3 companies down, 17 up. 4 down, 16 up. So which 4 companies are down? QBE Insurance, Woodside, Macquarie Group, and Telstra. and the best performing company. In fact, there's no company that performs significantly better than the rest, because there's three companies here who up by over 1.8%. Aristocrat seems like that company's doing really well right now. Rio and Westpac. Why Westpac? Why are the banks up a lot? They were overvalued before today. Now they're even more overvalued. It's amazing what's happening with the banks right now. And I'll talk about the ANZ Group's results. Share price up 1.2%. It just doesn't make any sense. And again, the market can remain irrational for a long time. And in my opinion right now, the market is significantly irrational when it comes to the banks. And who knows, share price can keep going up. Their results, their profit can keep on falling. And that just makes the irrationally even more weird. That's probably a good word. Or weird. It's weird. Okay, now let's have a look at the best and worst performing companies on the ASX today. See if I've missed anything. Start off with top gainers by percentage change. Merino Co. Volatility continues, up 57.4%. Well, I'm not going to discuss Merino Co. anymore. There was a few comments in regards to that company. So let's have a look at the comments right now. Let's have a look at Roger Dawn. I'm going to mispronounce that word again. So Merino Co. listed with a prospectus that reads like they're expecting a declining revenue over the next few years. And in fact, I did not have a read of their prospectus. And if that's true, then what's happening? I think there's something weird going on with Merino Co. I don't think it's just day traders. They love the volatility. Something else is happening here. And Rick Thellian says, Merino & Co. disclosure of notification of larger shareholdings traded or optioned unsure, but my calculation stock was brought non-cash at 20 cents per share. Yeah, okay. Okay. So not really sure what's happening with Merino Co, but I'm staying well away from that company. Anything else of interest here? Avanti share price is up and down. We can move on from that company. A company called Pantera Minerals. There's also a company called Metallica. So we do have a lot of heavy metal bands within, or who have names, or mining companies names. Mining companies named after them. I wonder if Pantera Minerals is named after that company, or not that company, that band. What else? Bisalloy Steel up 20%. That's a little bit of surprise. They did have their AGM, and I did have a look at their presentation. I didn't see anything that was overly bullish there. So I'm a little bit surprised the share price is up 20%. Was it even marked sensitive? I can't remember. No, it wasn't even marked sensitive. I did know they had their AGM today. And it wasn't even a marked price sensitive. So what's happening? So if the share price has increased 20% and they had the AGM and it's not marked sensitive, something's gone awry. So either there was some price sensitive announcements or some price sensitive news within their AGM or their chair's address to shareholders, or just a bit of noise happening with, I'm going to have to get some water. Don't know why that happens. Sometimes I just want to cough, and water solves all issues. So what's happening with Bisalloy? No idea. So this is a little bit of surprise. Didn't expect share price to be up 20.85. Was BHP up a lot? No, what's not BHP? BlueScope Steel. And no, that's down 2.9%. I was going to say maybe the steel companies are up a fair bit. Let's have a look at Bisalloy, because the share price of this company was under pressure. And that was maybe 3 months ago. And it's been a little bit volatile since then. I'm not sure. This is one of those weird ones where I just don't know. This could be an upgrade. This could be simply a broking firm upgraded Bisalloy Steel. That maybe is all it is. I'm just going to have a quick Google this because I'm interested. There's actually nothing here. I would assume it's just maybe some broking firm upgraded the price. Pretty big volume coming through as well. Okay, let's move on to the next ones. In fact, I've done with percentage change. Let's have a look at the best performing companies by market cap. So we have Neuren. We already knew that. Hyperion. Okay, that's sort of a tech company. I can't tell you what they do. So I could not give an elevated pitch about Empyrean. The one thing I do know about this company is the chart looks brilliant. So the chart does look brilliant for Hyperion X. Really nice looking chart for this company. Yeah, not complaining about that. If I was a shareholder, I would not be complaining. Appen up 15%. Why? Oh, there's actually a theme here. Hyperion, sort of like a techie sort of company. Appen's considered tech, but I wouldn't say that. BrainChip, Titomic. Where's Weebit Nano? Oh, Intelligent Monitoring Group's had a bit of a bounce. Not surprising. And Findy up at 10.1%. And Titomic, yeah, it's been on a bit of a tear recently. Titomic. Let's have a look at the chart for Titomic. Yeah, look at that beautiful, nice little pullback, and the share price has gone bonkers. Now, the market cap of this company now is getting a little bit too silly. So it's moving towards about 250 million on fairly low revenue, but maybe the market is expecting some really good growth in revenue receipts over the next year or so. I'm not sure if that's going to happen, but sometimes the market can get a little bit ahead of itself. You get a little bit too excited, and maybe that's what's happening with Titomic. But if I was a shareholder, I'd be fairly happy right now. However, the share price has increased 2 days in a row by a fair bit. Anyway, or maybe this is a company that could be benefiting from Trump. Okay, let's move on to the worst performing companies today, the top losers. And we have a company on a fairly low turnover, the top loser of the day, turnover $372. Let's move on. I am seeing nothing here. When I say nothing, I mean nothing. SSR Mining, they did release something the other day, but I think it was a few days ago. This is a gold company, probably most well-known in Australia because they had a Turkey project, and I think one of their mines in this Turkey project failed, and maybe some people died, I can't remember. So they did release their results yesterday morning. So we've already had 1 day of trading. Share price actually went up on really low volume. 124 shares traded yesterday, and today it's up to 25,000. So more than likely, this is maybe just a little bit of noise, if anything. So we can sort of move on. And that's about it. Now let's have a look by market cap. Hopefully there's some more. So we have Block. Not surprised there. So they did release their quarter results. Share price down 6.5%. Again, that's in my top 5. A recent listing on the ASX, Bhagwan Marine, down 4.96%. I haven't looked at this chart at all because it's a recent listing and I need a little bit of news flow before I get even a little bit excited about this company. And they listed, according to this, they listed on the 30th of July, 2024, and the share price has dropped. So I need to see either a profit upgrade or the first financial results before I get excited. And when I say first financial results, I mean, the next financial results, because they might have released financial results in August, but that's within them like a month from when they listed. Okay, and let's go back to the top losers. There's nothing much else here. Okay, let's get to the top 5 stocks of the day. There's a few companies that did not make it. So I've already talked about Neuren, and so we can move on from Neuren. Vulcan Energy. So this was an interesting one. Share price up 4.9%. I really was going to include this company in the top 5 stocks. First, lithium hydroxide production at downstream plant. So it's not the sort of announcement that I would get me overly excited, but Vulcan Energy's chart is looking interesting. Share price was in this little bit of a downtrend, and that wasn't failed, it broke. In fact, there it is. So the downtrend was broken probably 2 months ago, 25th of September. It's broken on that particular day, and the share price has rallied since then. Share price did drop a fair bit yesterday, so it looks like this bounce is because of this announcement, plus a fairly big drop yesterday, about 6.8%. So I wouldn't get overly excited about the performance today, but the chart does look interesting. It does look interesting after the share price was in that downtrend. And another company that I was very close to putting in the top 5 is Jumbo Interactive. They did have their AGM, share price down 3.5%. They also released a trading update. and that was marked price sensitive. So I actually had a look at that particular trading update, and I wouldn't have been surprised the share price was up a little bit, and I wouldn't be surprised the share price was down. Obviously, it's down a little bit. But the main thing about Jumbo Interactive is the chart looks like crap. But I think there is potential. If the share price keeps on falling, you're going to see some value investors come in, because this, I would imagine a few investors out there would classify this company as a quality company and a company you might want to own for a while. And I would imagine some of those value investors getting excited as the share price continues to fall. They might get excited. So the share price of Jumbo Interactive is in a bit of a downtrend. Share price falling to $12.52 today. And in fact, the last time share price was this low was about 2 years ago. Yeah, 2 years ago. Now, if the share price falls below, say, $11, that would be fairly bearish. But have a look at this chart, a weekly chart. Share price has done nothing for 2 years. In fact, you could even say share price has done nothing for 5 years. Went to a high of about $28 back in late 2019, but it's done nothing, done absolutely nothing since, last 4 years, since the COVID-19 crash. In fact, the share price of this company was crashing before COVID-19. So obviously they released something negative, and I'd say they released something negative in October 2019, probably their AGM, close to their AGM. Anyway, share price during that week dropped 21.7%. Okay, so let's get to the top 5 stocks of the day. And the number 5 is not a company that's listed on the ASX. However, you can put it in here. Under Armour. Under Armour up 27.2%. Now, one of the reasons I knew this happened is because I actually do own shares in Under Armour. And I'm going to have to say, I'm going to have to give myself some credit here. It's a company I've been following for many, many years, because I actually do like their running clothes, their running gear. Really like their running gear. But at times I find them a little bit too expensive. So sometimes I like a shirt or some shorts or running shorts, and I look at the price and go, no, I'm not going to buy that for $60, $70. I'll just wait till it's on special, something like that. But I do like their running clothes. And probably my favorite running clothes are Under Armour. So I've always had an interest in this company. But over the past few years, maybe in the last 4 or 5 years, they have not really performed all that well financially. And things were starting to turn around, I thought. And then I saw the share price drop about 5, 6 months ago. And it got to a point where I went, I'm going to buy some shares. And that was the low. That was a low. This was a case of being able to almost perfectly time an entry point. So I have just been following this company a little bit more closely because of that. And they did release their results. And the results absolutely smashed expectations. And when I say that, I mean they smashed expectations. In fact, I might go to earnings calendar. I probably wouldn't be able to find it here. What's their market cap? Maybe symbol. UAA, UVW. Oh, gee, how many companies? What's the ticker? UAA. What's not there? Anyway, let's do what I did. Under Armour, not Australia, just Under Armour. News. Under Armour surges as turnaround led by founder gains steam. Why Under Armour stock is up today? Under Armour stock rallies on improved operating outlook, but it was really maybe some of the share price increase was because of improving outlook. But the other reason why the share price increase was because they beat expectations. And the article I did read, of course, I won't be able to find it for some reason. Here we go. Under Armour tops Q2 earnings and revenue estimates. Okay, this could be the article I read, Yahoo Finance. And here it is. So earnings of 30 cents per share, beating the Zacks consensus estimate of 19. So this compares to earnings of 24 cents per share a year ago. So this quarterly report represents an earnings surprise of 58%. Yeah, the earnings were 58% better than expected. A quarter ago, it was expected that this sports apparel company would post a loss of 8 cents when it actually produced earnings of 1 cent, delivering a surprise of 112%, but that's on a fairly low basis. Over the last 4 quarters, the company has surpassed consensus earnings per share estimates 4 times. Okay, so let's have a look at the chart for Under Armour. And there's me buying some shares. When did I buy shares? May. So we're talking about, 6 months ago. Yep. And if you have a look at the daily chart, well, in fact, we'll have a look at the daily chart first. So I put a bid in. So I've got this little support level at about 640, and I put a bid in just below that, just in case the share price drops. And then on that day, the share price rallied. It dropped, hit my buy price, and then rallied. In fact, on that day, share price closed at $6.71. So almost immediately in profit. And only once has the share price fallen below when I bought, and that was a few months later on the 5th of August. But when they released some results in August, 9th of August, the share price rallied. It was up, up that day by 20%. And another positive quarter result from the company, share price up about 27%. And this chart does look really interesting now. But again, this company has been under pressure over the last few years, probably even the last 5 years. They've not done a good job. But before that, between 2010 and 2015, look at that beautiful chart. So I wouldn't say I'd expect that sort of turnaround happening again, but I just thought this company was looking pretty good value at these levels, particularly if the new management can turn things around. I think there is new management, and this chart is starting to look really good. So this was a case of me not buying because the share price or the chart was looking good. This was me just buying because I thought there was some value at that current prices. So in a way, I was being a value investor here, not a technical analysis or a chartist, just being a value investor, which is how I started investing, value investing. Okay, so that's Under Armour coming in at number 5, ANZ Group. Share price up 1.32%. So don't forget, the share price of this company has probably increased 40% over the past year. So that would mean the market was expecting some really good results, really good increase in profit. So let's have a look at ANZ Group's really good increase in profit, if I can get the announcements bit to work. Okay, so they released a massive amount of announcements today. So which one did I read? I can't even remember which one I read, but there's so many. I would have read the news release, I think. Let's see if it's got a nice little, I read this one. So let's have a look at the growth. Pretty good growth in ANZ profit because share price has increased significantly. Beautiful uptrend. Okay, so let's have a look. ANZ statutory profit down 8%. Wait, that doesn't make sense. Return on equity down 131 basis points to 9.7. Doesn't make sense. Cash earnings per share down 9%. Wait. The profit earnings per share have all dropped almost 10%. That does not make sense. But they did raise a dividend. Oh, I can almost guarantee there's some investors who just skip past the profit, skip past earnings per share, return on equity, just go straight to the dividend and go, oh, dividend up, yummy. It's not sustainable. You can't keep raising dividends if your performance falls. Anyway, and I love this. They put total shareholder return in financial year 24, 27%. Well, that's because the share price has increased, and you're not going to see that again. I can almost guarantee you will not see a 27% return in ANZ. Well, maybe ANZ, maybe, but definitely not the other banks in the next year. And here's our overview of financial performance. So, many negatives here, many negatives. So nothing to be excited about with the results. And funny enough, if you just read the commentary, you might be mistaken, because this is how the ANZ CEO said. Shane Elliott started his bit of commentary. The strong performance again. What strong performance? Your profit fell. It demonstrates the benefits of our simplification agenda, combined with the targeted investments in our core banking businesses. Again, your profit fell. Profit fell. And that is really interesting. Despite competition and inflation impacting profits, we reported our second strongest revenue performance ever and 4-year cash profit of 6.7 billion, even though it fell, helping deliver a total return of 27% for shareholders. Now, you did nothing. It was a share price. It was just the people buying ANZ. They gave 27% return for shareholders. If they sell now. Yes. So I do have a little bit of some problems with this bit of commentary. It's It's not a good year. When profit falls, it's not good. Revenue's down. That's the other thing. Yeah, revenue's down, expenses up, but the market liked it. Share price up. And the insanity continues when it comes to the big four banks in Australia. When will the drop start to happen? In fact, the share price of ANZ today got to a long-term high, and probably the company's weaker than it was. Last time the share price was this high was back in 2017. So it's about a 7-year high in the share price. Have a look at this weekly chart. This is not the sort of company you want to invest in for the long term. Share price has done nothing. And I can almost guarantee you there were probably people back in 2007-8 going, oh, look at that beautiful share price of ANZ. I can almost guarantee you in March 2015, beautiful run up in share price, and there was people saying, why is ANZ so expensive? And that is the share price high for this company. Maybe ever. Yep, ever. Anyway, not a really good chart, this one, over, what's it, a 20-year period. It's just gone sideways over 20 years. All you're getting from ANZ is a dividend. The company is not growing. Okay, so that's ANZ Group. Square or Block. I still call this company Square, even though they changed the name to Block. They want to imply that they've gone from being a two-dimensional company to a three-dimensional company. Share price down 6.1% on quarterly report. And I think it was just the outlook, if I remember correctly. I did see a bit of commentary on this, and it seemed like it was just the outlook. So it seems like everything's moving in the right direction for the company based off their financials. So if you have a look, God, that's a balance sheet first. So revenue, nice increase in revenue. So revenue is increasing. Profits, 281 million for the quarter, up to 941 million so far for this year. Earnings per share, nice increase. So it seems like everything is moving in the right direction. And it was just a little bit of a commentary when it comes to the company's outlook. And I did see this somewhere, and I can't remember where I saw it. Block earnings. Maybe I'll do that. Block earnings. News. Block shares tumble on revenue miss. Okay, so that's what I read from another site. Another site mentioned they had solid numbers for this particular quarter, but the outlook was fairly weak or weaker than expected. And that's why the share price was down. But Yahoo Finance says actually right there. So it says here, Block reported third quarter earnings that met expectations, but revenue fell short of estimates. Okay, so probably the other side was just as right as this side. They said it sort of met expectations, but they'll talk about earnings. This was revenue. In fact, I don't care as much about revenue as earnings, but I do like both of them. And they said because of this miss, shares are down 10% in after hours trading. But I'm just going to see if there was some sort of outlook. That's what I saw or read in this other site. There was some sort of weakish outlook for or from a Block and the management, Jack Dorsey. Look at that. Block shares are diving 7% despite significant profit growth in third quarter. So this is a case where this Motley Fool doesn't understand. It's not that the revenue or profit grew, it's how it compared to estimates. So there are quite a few investors who don't actually understand that. And maybe they don't understand that because of headlines like this. Block shares are diving 7% despite significant profit growth in third quarter. What's happening? Why? Anyway, I'm trying to find any sort of outlook. Here it is. And thankfully, Motley Fool has it. The company said it had increased its 2024 full-year guidance. No, that's not what I read. In fact, that's bullish. That's all bullish. They've actually increased their profit. So maybe it was someone else. Analysis had expectations for Block, and those expectations were a little bit higher than the increase that Block gave. Anyway, I'm trying to find that article, but I almost guarantee you I won't be able to find it. And it doesn't matter. Let's have a look at the chart for Block SQ2. Now, I wouldn't be, yeah, as I mentioned, in after hours trading, share price of Block is down. In fact, we can actually see what it is in Block. Is it on New York Stock Exchange? Yeah. We can see what share price is doing in after hours trading. No, we can't. It's not there. Oh, it's not this one. There's another site you can see it in after hours trading. Which site's that? I'm trying to remember. There is a site where you can see the share price. Oh, it's FinChat. It's FinChat. That's right. You can't see it in Trading View, but you can see it in FinChat. What it's doing in after hours trading. And so, oh, it's not that. It's only down 1.75% according to this. There you go. And here's the chart for Block. That's the weekly chart. Share price has been consolidating for the last 2 and a bit years. And I have been waiting for a bit of a breakout for this company. And on the ASX, this is SQ2. And of course, Block is listed on the ASX because they bought out Afterpay. And if you look at the daily chart, in fact, did look like it was trying to break out, doesn't it? And a pretty big volume coming through today, and share price has dropped 6%. But the chart actually doesn't look that bad. I don't mind this chart. Anyhow, coming in at number 2, we have Avita Medical. This is an interesting one. Share price down 4.1%. They did release their third quarter results. And what was interesting about this one isn't wholly because of what's happened today. It's what's been happening in the last few days when it comes to the share price of this company. So if you've been following along or been following the fortunes of this company the last few days, you probably know what I've been talking about. And on open this morning, the share price did or was up about almost 10%. So the share price has pulled back a fair bit. In fact, I'm lying there. Share price would have been up about 20 cents. Probably would have been up about 6 or 7% just based off the previous close. And then the share price dropped through the day. I did have a look at this. It wasn't anything in this that surprised me. Now, this company is moving towards profitability. And that's what is interesting to me if they change their timeline. And right now they did mention it here somewhere. If I can find it, here it is, confirming previously given guidance of achieving cash flow break-even and GAAP profitability no later than the end of third quarter 2025. They're still loss-making, but revenue's growing at a pretty quick rate. So we're talking about, 30 to 40% increase in revenue. So commercial revenue up 44%, gross profit margins of 83.7%. And I think this company could easily be profitable right now. They also anticipate FDA approval of RECell Go Mini by the end of this particular year. So I thought this was okay, not bad, no significant changes with their timelines for profitability. So I was intrigued to see how the market reacted. Now, the reason I've included this company in today's top 5 stocks is simply because of this chart. So the share price of this company had been been trading in a range since about April, not a long time, about 7 months. And I just wanted to see the share price get above $3.20, and it did it 3 trading days ago. So it broke out on the 5th of November. It was a classic breakout. The only thing missing was good financial results or good financial news or anything like that. The share price popped up on pretty good volume, much higher volume than what this company saw in the previous few months. And the share price was at least a 6-month high. And the share price kept on going up the next 2 days. So this was a really intriguing few days of trading. And then I saw them release the results, and I thought, ooh, I wonder if there's been some loose lips. Someone knew or saw the results beforehand and were taking a position. And then we had today. And initially, I did follow the trading of the company. So the share price was up, and not completely surprised we've seen selling, because sometimes you do see that. So let's have a look at the 1-minute chart. So the share price opened at the high, or actually was in the first minute. And then the share price, they started selling straight away. But yeah, the share price went from 385 down to 332. So almost talking about, what's that, 50-cent drop in share price, 50 divided by 384. I can't do that sort of maths in my head. I'm just not that smart. So 50 divided by 384, we're talking about a 7% drop in share price. No, 13, so I was way off. Yeah, 13 makes sense. 50, 10%. No, did I get that right? Did I do that right? Yeah, 50. Yeah, 50 is way more than 38.5. I had it the wrong way around. So the share price dropped 13% from the high, which was around about 10.02. So the first 2 minutes of trading. And the low was at 12.53, so 153. So it's only about 3 or 4 hours later, the share price reached its low, falling 12.5%. So there was initial positive reaction, and then I suppose during the next few hours or the first few hours of trading, the analysis just had a look at the results and went, ooh, we're going to sell. Anyway, so let's have a look at the daily chart. Share price tried to bounce, tried to get close to the breakout level at $3.20. That would be a nice little buy-in if it actually hit that level and then we sort of bounce, if we saw a bounce. Okay, so it's Avita Medical coming in number 2. And coming in number 1, we have REA Group. Share price flat. Okay, REA Group, first quarter financial year 25 financial information released. I'm just have given this the number or the top stock of the day simply because it's one of the biggest companies on the ASX. Everyone knows this company. In fact, when I say one of the biggest companies on the ASX, list of ASX companies, just take your time. I'm in no rush. It comes in at number 18. It's the 18th biggest company on the ASX. And I would not be surprised that in 5 years, this is among the 10 biggest companies on the ASX. And in fact, I almost guarantee that's going to happen because the difference between number 10, Fortescue at 60 billion and REA Group 30 billion, yeah, I think this company can double in valuation over the next 5 to 10 years. So this company will be moving up this list over that period of time. So even though share price has not increased all that much today, the share price might be near an all-time high. So let's have a look at the sort of financial results you might find from a high-quality company that is continuing to grow. So let's have a look at some of these numbers. So I'm just going to do percentage change. Revenue, 21% higher. Operating expenses, 19% higher. So a little bit of operating leverage there. A little bit of increase in their margins. That's pretty good. Operating EBITDA up 23%. We know it's going to be higher than revenue because higher margins. EBITDA up 23% and free cash flow up 16%. Now, I don't usually focus on free cash flow. I have a look at everything. I would like to see free cash flow up a little bit, but this company is profitable and they're still growing. And Owen Wilson with his shonky nose, wrong Owen Wilson, I know. Seller confidence continues to drive a strong listings environment, and I'm going to be a part of that. Delivering greater choice for buyers and some moderation in house price growth. In this healthy market, we hit new audience records and our customers increasingly leverage the value of our premium products to differentiate their properties. This underpinned the strength of our financial performance. I had a little bit of a chat with my real estate agent talking about REA Group. I just said, this is it's a massive moat. And they said the price increases REA Group have made to their customers has been insane. So when they started, it used to be like 1 cent, maybe 5 cents, maybe 10 cents, $1. And now it's in the thousands of dollars. Yes, you have to pay REA Group if you want to list your house on their website. You have to pay them thousands of dollars. That's why this company keeps on growing, because they have a significant moat, and that moat's not going to change. We've seen competitors try to take off some market share, but REA Group at the point that you have to, if you're selling a house, you have to list your property on this particular website. I'd love to see or hear from people who have done it a different way, but in this day and age, the majority of people who sell their houses need to list it on REA Group's website. Okay. Oh, by the way, let's have a look at charts before we move on. And I am a shareholder of this company. In fact, I'm going to say right now, all my holdings through my investing life, this has been my longest holding. I have not held this all the way through. I did sell this company for a brief period a few years ago, but I initially bought this company back in 2010, 2011. Share price was under $20. Well, not yet, and I sold it late 2021, and then I bought back in 1 year later. Anyway, today the share price, or yesterday the share price got to a new all-time high, and today, yeah, it's just below that, and nothing wrong with this chart. In fact, my sell point, if I decided to sell REA Group, would be at about $195. In fact, I might raise that to $200. Now I'm going to raise it to $205. There we go. Now, it doesn't mean I will sell, but I might sell some if I see the share price drop to that level. Okay, let's have a look at a few of the. No, I'm not going to do any comments. I've already done two because I have to finish this video because I am time constrained. Anyway, so if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.